Hello and welcome to Commodity Champions. I'm Anisha Gupta. Well, 2022 has been a roller coaster of an year with all-time highs in copper, aluminum, cotton, edible oils and multi-year highs in crude, gas, sugar, metals and precious metals. And then from those kind of levels, we saw a sell-off on dollar strength as global central bank rate hikes took center stage. The Chinese demand concerns and an impending recession concerns also have taken the commodity prices on the weaker side. So what does 2023 look like for the commodity space? To discuss that, we have a guest joining us. Guy Wolf, the global head for market analysts at Marex, now joins us. Guy, hi, thank you so much for joining us. And I want to start with the crude oil prices itself, because the last couple of years clearly have been making headlines when it comes to crude prices. And this year as well, we've seen Brent hit a high of 139 on the higher side. And then we've seen almost $70 of lows in the year as well. As we move forward from here, what are the fundamentals you'll watch out for? And what's your sense on price range for 2023?
Yeah, I think what we've seen over the last few weeks is very much a reversal of pretty much everything that was happening prior to that. And part of that is an end-of-year effect, I think, as people look to unwind the major trades that are in place. And crude, one of the reasons why other commodities have been going up as crude has come down is because crude very much has been, and gas obviously, very much the driver of global recessionary fears. We had strong metal prices in the first part of this year, and that wasn't causing any concern because base metals tend to be relatively small components of end products. But energy obviously has a very, very material impact on household budgets, and energy ultimately is the building block of everything. So as crude's been coming off, other things have been rallying, and I think that slightly reflects not just sort of hopes that China will recover somewhat, but also the fact that crude actually is one of the few commodities where there probably is enough global supply, and supply can come online, whether it be the US, whether it be OPEC or elsewhere, and can be moved relatively easily around the world. Gas, on the other hand, is much more problematic.
Guys, so what would you look out as fundamentals as we move ahead? Yes, there are recession concerns, the China demand concerns as well into the market. How are you looking at Russia reactions? And as we step into the new year, what are the concerns and opportunities that you look for crude?
Well, I think if 2022 showed anything, it's that forecasts are very, very difficult in today's world. Clearly, there are still major concerns. We don't really know what's going to happen with Ukraine, although obviously, recently Russia has been making noises about a negotiated solution, and clearly that would be a positive. We have to remember, of course, that Russian crude has still been going out into the world. It's not as though supply there has been turned off. We haven't seen OPEC increase production in the way in which the Western world would have liked. So I think more volatility is certainly to be expected. Having said that, I think a lot of the sort of the risk premium perhaps we've already seen. So I'd be surprised if we saw highs next year over and above the highs that we've seen this year, but I'd still expect to see some volatility.
Oh, well, absolutely. So, Guy, I was reading a lot of reports, and the forecast really seemed to be anywhere between an average of $65 to 110 on the higher side for the next year. I mean, what side do you see markets really panning out for most part of the year?
Well, to be honest, it wouldn't surprise me if we saw both of those prices next year. I think, on balance, though, it's more likely we'll see lower prices and higher prices in crude. There is potentially a lot of crude that can come onto the market, and overall, I think it's likely we'll see lower prices.
Okay. Moving on to natural gas, and you mentioned onto that one as well, and we've seen a huge volatility into that one this year, and the concerns are that for this winter there may be stocks, but moving on for summer and the next winter is where the major concerns could be coming in for. How are you looking at this year panning out in sense of gas?
Yeah, I think, we have to recognize that gas is just going to have a much higher structural level of demand than it has done in the past. Germany built an LNG regasification terminal in an extraordinary short period of time, and actually brought it online this year, I think, having started it in May, and normally they take 3 years. So I think clearly, unsurprisingly, there's a huge strategic imperative to build LNG import infrastructure into Europe, and that is going to keep gas prices high to the extent, the only bottleneck there is the amount probably that the US can export and the sort of shipping capacity of LNG. But I think realistically, if gas prices ever did drop, then clearly there would be significant sort of state-led demand in order to keep inventories as high as possible in this current environment.
Guy, macros, micros is one thing. I mean, the individual fundamentals is something that the markets are watching out for. But clearly, the second half of this year was all about dollar index, the kind of highs it hit, and the kind of decline that led to buying into commodities back yet again. How are you reading into the global central banks going forward from here? And is there a range that you're working with for the dollar index?
Yeah, I think we're still very much in a macro-driven world, to be honest. I think, again, as I said, a lot of the so perhaps the aggressiveness of the moves that we've seen in recent weeks is a function of the unwind of a very, very strong trend for macro funds and CTA funds that come up until that point. I think there's still a lot of uncertainty. We don't really know how China is going to rebound and at what pace out of the end of COVID zero. I saw this morning they've just delayed their economic announcements for next year as we've sort of seen a surge in COVID cases. So it's not really clear exactly the path that China is going to take out of the lockdowns that they've had. Secondly, there's been a lot of contradictory noises out of the Fed about the pace and ultimate peak in US rates, and I think we need more clarity on that. Europe has been lagging in terms of rates. So yeah, the dollar very much had everything behind it for a period of this year with, it was raising rates the most aggressively, had the highest rates, and actually had the highest growth rates in its economy. So that was really sort of everything was pushing towards dollar strength. And yet more recently, we've seen very contradictory noises where we thought maybe we knew where the end of the rate cycle was. And yet since then, we've seen exceptionally strong economic data and noises that perhaps rates need to go higher than were previously thought. So I think the first quarter of next year will still see very much macro-driven markets. I think it's probably more likely the dollar will see a rebound as the US perhaps firm up its guidance about where rates will go to in the US. And because the US is effectively energy self-sufficient, ultimately that gives it an enormous growth advantage over the rest of the world in this environment. So I think it's probably more likely than not that we'll see a rebound in the dollar in the early part of next year.
Okay, to the metals then, and we saw an all-time high in copper and aluminum today, and multi-year highs in zinc and nickel, of course, is a story to remember in what happened this year. Within metals, are you picking up on something for the next year?
Well, we did see higher copper prices earlier this year, but I think they are, copper and nickel in particular, incredibly sensitive to Chinese demand. And although we're sort of still around about the $8,500 per ton mark in copper, if we think back, say about four or 5 weeks ago, the first time there were sort of potential noises about the end of COVID zero policy in China, copper went up by $1,000 a ton in 2 days. So that shows you a level of the sensitivity of Chinese demand to the copper price. So copper and nickel in particular will be very much driven by whatever happens in China. I think zinc and aluminium are, again, cannot avoid the macroeconomic or geopolitical situation. There's significant production in Europe, which has been impacted by the invasion of Ukraine, and both of those products are very sensitive to the cost of power. So that will very much drive those metals.
Guy, also, when you look at the chart of last 1 year, 3 years, or even 5 years, perhaps, we've seen precious metals give you as much or higher returns than what equities have done. And yes, precious metals do stand strong. What's your sense going forward into this? Do you see this pattern change?
Well, I think gold has always had this safe haven characteristic. So it doesn't surprise me particularly that it's held up relatively well, even in the midst of the huge dollar strength we've seen. And then obviously as the dollar has corrected quite aggressively, gold has rebounded nicely as well. So I don't see, in the short term, it's hard to see gold sort of losing its luster. We have seen that perhaps 3, 4, 5 years sort of post a crisis where sort of people sort of are a lot less interested using gold. However, having said that, I think that probably the biggest obstacle for gold in sort of more medium term is now interest rates are offering a reasonable yield. Then obviously gold offering no yield doesn't look necessarily perhaps as attractive relative to treasuries. Silver, I think, has got a more interesting characteristic. It's quite an important input into solar panels, and that's obviously would expect increased investment in renewable technology in Europe in particular. And so silver demand could actually see benefits from that.
All right. So the precious metals do stand tall from here on as well. All the fundamentals that we've recounted on are supportive of the precious metal buying. Guy, as always, thank you so much for joining us, and thank you for making time for CNBC TV18 today. With that, let's slip into a short break. We will continue discussing the 2023 outlook for the commodities on the other side. Joining us would be Preetham Kumar Patnaik of HNI and NRI Business and Kunal Shah of Nirmal Bang Commodities.